The most important thing in your life, beside family, friends, and your physical health, taking care of yourself, is your money. Why? Because we live in a capitalistic society where the competition for money is intense. There are ways to make money outside of corporations, outside of entrepreneurship. You've got to be very, very careful. The stock market is very, very risky. Gold and silver, very risky, but it can pay off. We take American Hartford Gold, been our sponsor for, I don't know, 8 years. And I do business with the Oxford Club, which is an investment company. It puts out a newsletter. And that's the only newsletter I get, because the others, I don't trust them. Oxford Club has made me money overall. It's lost me money too when they recommend a stock that goes down, which is going to happen if you go into the market. Now, why am I telling you all this in a Smart Life segment? Because now there's a transition between a heavily regulated government, Joe Biden, and a robust, let's say, capitalist Donald Trump, who doesn't want government regulation. He wants all of this stuff to be in the marketplace. However, Trump's a big tariff guy, all right? And that's scaring people. And then there's AI, which is coming in big time. And then there's crypto. So the average American who, and I work hard for my money, I bet you do too, we don't know what to do under the Trump economy. Joining us now is a man who I do business with, and I recently did a major interview with him for the Oxford Club, Alexander Green. He's living large in the Bahamas, celebrating his anniversary. And you know, when you're a capitalist and you do well, you can go to the Bahamas and and pay all that hotel tariff out there. But anyway, I think I've set you up in a way that's fair. And I want people to be very, very cautious. I'm a conservative investor. As you know, I've known Alex now, I'm early 90s, so 30 years almost. So look, first question, the stock market was pretty good under Biden. Why?
Well, let's be clear. The last 2 years of the stock market, 2023, 2024, were good under Biden. Let's go a little further back. 2022, when Bidenomics had a chance to kick in. Remember, he's elected in 2020. He starts implementing his plans in 2022 to 21. By 2022, we have the highest inflation in more than 40 years. We have interest rates that have soared, and the stock market, the S&P 500 declined 19% in 2022. The NASDAQ lost a third of its value. The bond market, with interest rates soaring, had its worst year in over 100 years. And even a conservative diversified portfolio, 60% stocks, 40% bonds, had its worst year since 1940, pre-World War II. So Biden caused a lot of damage with his regulations, which shackled the oil and gas industry and businesses everywhere. His massive multi-trillion-dollar deficit spending, which he was warned by even by liberal economists like Larry Summers, you're going to stoke the highest inflation we've seen since the 1980s. And that's exactly what we saw. But business is resilient, business is adaptable. And by the 2023 and 2024, sales were up, profits were up, and the stock market was up again. But it wasn't due to Joe Biden. It was a recovery from Bidenomics, which even the Biden administration had to stop using because it had such a negative connotation.
Right. And then one of the big things was it started to drill oil again, and the oil harvesting got ramped up. And this is from Mr. Global Warming. Now, Trump has been in office 31 days. The Dow is up 1.2%, 531 points. NASDAQ up 285, 1.4%. But every day when I check, it's up, it's down, it's in, it's out. I mean, this isn't, anything could happen. And that worries me as an investor. How do I get over that worry?
Well, you begin to get over it by recognizing that volatility is the norm. I mean, stock markets, if you could get the kind of superior returns that equities deliver with the smooth upward climb of a passbook savings account, everybody would have all their monies in equity. Volatility is really just the price of admission when you own stocks. But let me also say, Bill, remember the market started to take off before Trump took office. When the election results came in and they saw that the Kamala Harris was not going to be the victor and Donald Trump was going to be the new president, stocks took off immediately. Why did they take off? Because not only was it not the end of democracy, as we were told in some quarters, but people know that Trump is a businessman. And he knows that wealth is created in the private sector, not in the public sector. That's the private sector is where innovation happens, it's where productivity happens. And a administration has policies that can either provide a headwind, which makes it tougher for businesses to grow and investors to get ahead, or a tailwind, which makes it easier for businesses to prosper and for investors as well. And what Trump wants to do by cutting both the corporate and individual tax rates, putting money in consumers' pockets and giving companies more money to spend on research and development and new factories and new distribution channels and hire more employees and pay higher wages and better benefits. Those are all positive for the economy. His policy of killing 10 regulations for every new one created, hugely positive. I remember a bank president saying one time that he was hiring more compliance officers than he was loan officers. Why? Because the government set so many regulations, the bank was scared to death it wasn't going to comply with all these regulations. And what does it do? It raises interest rates, it cuts into profits, it hurts stock market returns. So cutting interest rates, cutting tax rates, deregulating, unshackling the domestic oil and gas industry, cutting the waste, fraud, and abuse. These are all positive things for the economy. And that means it's positive for the stock market because if consumers are spending, if they're confident they're spending, and if they're spending, it's adding to corporate sales and ultimately corporate earnings. So I think that we're going to see a wonderful economy and stock market over the next 4 years.
Okay, but remember now that most Americans don't have a lot of reserve. So if they want to get into the market, some of them are borrowing money to get into it, which is what we saw in 1929. So I understand that on paper, it looks like the Trump years might be very good for investors, but it's not a lock. Now, one of the things that you do is look ahead in your newsletter, Alex. And AI is coming in huge. So what in general, and I don't want you to recommend any stocks. If you're interested in what Alex Green is doing, then you go to Oxford Club. Was it oxfordclub.com, right?
Oxfordclub.com, yes.
Okay. You go there and then you can get what they have. But generally speaking, AI and the forward-looking stocks is what you're analyzing now, correct?
Yes. Yeah, AI is a very big deal because it's going to increase productivity. I'm on AI every day, and before long, every student is going to have an AI tutor. Every businessman is going to have, or business person is going to have an AI consultant. Every physician is going to have an AI researcher and assistant. Everybody's going to have an infinitely smart, infinitely available, infinitely cheap source of not just news and information, but strategy and questions asked and problems solved. And this is going to be huge for the economy. That's why you're seeing all these big tech companies ramp up their AI spending because they know the demand is huge. And in my view, 5 years from now, there'll be companies that are making full use of artificial intelligence and companies that don't exist anymore because it's just that imperative. As big as the internet was in 1999 and 2000, AI is even bigger right now, and we're in the early stages. We're still top of the first inning.
And you're trying to ferret out the companies with the most potential, but again, it's not that easy to do. I don't do crypto stuff, and I'm not even going to talk about it. I just way too risky for me. That's a whole different thing.
Speculative asset.
Yeah, you don't do a lot of crypto stuff. When I read your stuff, there's not a lot of crypto in there, right?
It's for gamblers, not investors.
Yeah, okay. All right, so bottom on this is that you believe there's opportunity in a Trump administration because it's a concentration of free market rather than government regulation. And when you recommend a stock that doesn't perform well, You tell everybody, but it's too late because we've lost the money. How do you feel about that?
Well, first of all, you're absolutely right, Bill. If you're going to invest in stocks, you're going to have winners and you're going to have
You have
losers.
losers, right?
Ted Williams is the greatest hitter of all times. 60% of the time, he didn't get a hit. He still was the greatest. Every investor, Warren Buffett, Peter Lynch, John Templeton, all the greats, they had losing positions. And so you go into it with the idea that you're buying a business. And if that business grows in profitability, the share price is going to rise and you're going to share in that profitability. And if the business stumbles or runs into competition that it can't meet effectively, it's going to work out poorly. We use, as you know, Bill, trailing stops. As long
Yeah,
as
you put
something's
stops
up,
on the stock. So if it goes a certain level, it automatically sells. All right, Alexander Green, Oxford Club, oxfordclub.com. Appreciate it, Alex. Have fun in Bahamas.
always happy to be here. Thanks, Bill.
Thank you for watching. Make sure you subscribe to my YouTube channel and follow me on X. Look for @Bill O'Reilly.